And good morning and welcome to the VSA Capital 5 Minute Morning Miner. It's Wednesday, the 15th of February. Good morning, Ollie. How are you? And how was your dinner last night with your girlfriend?
Yeah, morning, Andrew. Yeah, very nice, thanks. How was your evening?
Just another normal evening, I'm afraid, Ollie. Anyway, let's move on to mining. It's relatively quiet. I think Pan-African probably is the first one, isn't it?
Well, we've got some exploration results up from Apollo Silver, which is one of our clients.
Oh, yeah, all right.
Came up yesterday on the TSX, so we can start.
It caught me out there, Ollie. It was yesterday afternoon, yesterday evening. Go on, talk about that then.
So these are the last set of assays from Apollo's phase 2 drilling program. They're drilling the Waterloo silver deposit in California, which Paul Rankin worked on as a young geologist. And we've had all the silver assays come through, and these are related to the byproduct gold potential. And Apollo are the first group really to test this. And the results so far have focused on a 25-meter rise of mineralization at the bottom of the known silver resource. But these 5 drill holes, which are about 300 meters to the southeast of the current silver resource area, show quite a different structure of gold, more similar to the disseminated silver, but they're still quite low gold grades, but over very large intercepts. So you've got sort of 0.4 grams a ton gold over 91 meters, 0.6 grams a ton gold over 65 meters, 52 meters at 0.3 grams a ton gold, and all from surface, but thick intercepts of modest grade gold that adds a nice byproduct on top of the silver. But now the work they've done in this phase 2, the footprint of the gold mineralization on top of the silver is probably a kilometer by up to 400 meters. That's now been proven by drilling, whereas the silver strike length is about sort of 2.2 kilometers. The soil sampling indicates the gold could be that big, so more drilling to come, I would think, in the next phase. But it's a meaningful addition that this management team's added on to what was known at the Waterloo deposit, and also the metallurgical test work that they've just started on this confirms that it's oxide with simple cyanide leaching, showing recoveries of 75 to 95%. So that's a good start there. More to come, and it's still pretty cheap looking stock with 160 million ounces of silver and a market cap of about 30 million.
I think one of the problems is the silver price is just so frustrating. Everyone feels it should be going significantly higher, and it doesn't. I mean, we're currently at 21.46, which is lower than it should be, really, isn't it? But I don't know the answer to that. You know, all the indicators are it should be going up, demand increasing just rapidly through solar power and EV and all that sort of thing, but it labors down here. But there you go. Any view on that, Ollie, quickly?
Well, I mean, we're up from sort of 18 since the end of Q4, or start of Q4 rather, and it is a volatile price that you've got to be comfortable with it, you know, bouncing up to 24 and then back down to 21 before going higher. But yeah, I think all the pieces are there for it to move a lot higher over the next 12 months or so.
Let's hope so. All right, so yeah, Pan-African.
So some of these numbers have come out already. I think the production numbers have been announced. 92,000 ounce gold in the first half. That was down about 15% year on year. The 4-year guidance of 195 to 205,000 ounces does mean, though, that they're expecting quite significant catch up in H2. Lower production, though, does mean that unit costs were up So AISC of 1291 was up 10% year on year, while the cash costs at 1139 were up 8% year on year, and profit after tax dropped 37% year on year to $29 million. They've kept the dividend up, though. That's $20 million paid out versus 21.6. And the share price has actually, come off a very long way and very sharply over the last few months. Obviously, there's probably a bit of a South African impact as well.
I was about to say, Ollie, I mean, the biggest problem is that being a South African gold producer, I mean, with Eskom in the state it is, there's just no energy and power in South Africa. That's their biggest problem. I mean, actually, over 20 years, it's been a fantastic stock. It's probably South Africa's, best junior gold producer, but they get, excuse my French, buggered up by bloody Eskom.
Yeah, well, that's why all these South African stocks are so cheap, but there's not much they can do about it. They are putting in a solar project that comes in the second half. I mean, I guess the other thing that comes out from the production numbers, and I'm not close enough to the story to know whether this is something they should have foreseen, but a key thing in whether they can achieve the guidance in the second half is implementing an operational overhaul to try and make shift work more efficient. One of the problems they had was that as the mine is getting deeper, it's taking longer to get equipment and workers to the base, so the effective shift times are shortening, and therefore they're producing less gold. So overhauling shift patterns and all of that sort of thing, which they're supposed to now start implementing after a review, should help them to hit that higher gold estimate in the second half. And if you think they can do that, then there should be some share price recovery.
Yeah, I mean, they also need to go off grid. They need to just, put in their own power capability through renewables, get in the solar, get in the wind, get in the batteries, and run the business like that. Hopefully they will get on and do that. Anything else, Ollie, you wanted to?
There is an announcement from a small oil and gas company this morning, listed on AIM. Clontarf Energy is pivoting into lithium. They're going from oil and gas in Ghana and have signed up a 50-50 JV in Bolivia to do direct lithium extraction from brines. Looks like they're setting themselves a pretty ambitious target, with pilot plant production up and running by March and results by May. That seems ambitious. And also Bolivia, where they're planning to operate, has been quite a difficult jurisdiction for lithium. There's huge reserves of it there, but the majors have coveted it but never been able to get reasonable government approvals and agreements to actually produce that.
Well, I was about to say, Ollie, we all know that there's huge reserves in Bolivia, but we never talk about it because it's just impossible. And I would suggest that maybe being an oil and gas in Ghana and switching to lithium in Bolivia is quite a big jump, isn't it?
It is quite a big jump, yeah.
Jumping on the bandwagon, I think, comes to mind. But anyway, we'll see. Maybe we're completely wrong. Maybe they want to call us and tell us why we're wrong and they're right. I also noticed, by the way, today that Clean Tech Lithium, which we've talked a little bit about, which has been just going through the roof, has got an OTC quote today to try and tap into that market.
Yep, that's been a good move for some of these junior lithium stocks, particularly with assets in the Americas. So yeah, should open up some interest if they're active marketing out there.
Yes, but as we discussed, the lithium stocks are all coming off a little bit at the moment, so just be a little bit careful. Anyway, there we go. That's probably enough, Ollie. Yeah, we'll call it a day.
Yep. Thanks,
all right, very good. Speak tomorrow.